semiconductor market remains volatile and why it matters more than ever. Today, we're going to discuss why the semiconductor market remains volatile, what is causing these fluctuations, and why semiconductors have become one of the most important industries in the global economy. Despite the rapid growth of artificial intelligence, cloud computing, electric vehicles, and advanced technologies, the semiconductor industry continues to experience significant swings in demand, supply, pricing, and investor sentiment. So, why is this happening? To understand the volatility, we first need to understand what semiconductors are. Semiconductors are the tiny chips that power virtually every modern electronic device. They are found in smartphones, computers, servers, automobiles, medical equipment, industrial machinery, telecommunications networks, military systems, and increasingly, artificial intelligence infrastructure. In many ways, semiconductors have become the foundation of the digital economy. However, the semiconductor industry is highly cyclical. When economic growth is strong, companies invest heavily in technology and consumers purchase more electronic devices. Demand for chips rises rapidly and manufacturers struggle to keep up. But when economic conditions weaken, demand can fall just as quickly. Businesses reduce spending, consumers delay upgrades, inventories build up, and chip prices often decline. This cycle of boom and bust has existed for decades, but recent events have made volatility even more pronounced. One major factor is the explosion of artificial intelligence. AI systems require enormous amounts of computing power. This has created unprecedented demand for advanced chips used in data centers and AI training systems. Companies are investing billions of dollars into AI infrastructure, driving strong demand for high-performance semiconductors. However, investors are also asking an important question: can this level of spending continue indefinitely? If AI adoption slows, or if companies begin spending more cautiously, demand forecasts could change rapidly. This uncertainty creates volatility across semiconductor stocks and the broader market. Another important issue is supply chain risk. Semiconductor manufacturing is one of the most complex industrial processes in the world. A single advanced chip may involve hundreds of production steps and suppliers spread across multiple countries. Many of the world's most advanced chips are produced in a relatively small number of facilities, creating concentration risk. Any disruption, whether from geopolitical tensions, trade restrictions, natural disasters, or manufacturing issues, can have a significant impact on global supply. The industry learned this lesson during the global chip shortages that followed the COVID-19 pandemic, when shortages affected everything from consumer electronics to automobile production. Geopolitics is also playing a larger role than ever before. Governments increasingly view semiconductors as strategic assets. The United States, Europe, China, Japan, South Korea, and other nations are investing heavily to strengthen domestic chip manufacturing capabilities. At the same time, export controls and technology restrictions have introduced new uncertainties for companies operating in global markets. As a result, semiconductor firms must navigate not only economic challenges, but also political and regulatory risks. Another source of volatility comes from the sheer cost of innovation. Each new generation of semiconductor technology becomes more expensive to develop. Building advanced fabrication facilities can require investments measured in tens of billions of dollars. Companies must continuously invest in research, manufacturing equipment, and production capacity just to remain competitive. This creates enormous pressure to maintain growth and profitability, particularly during periods when demand weakens. Despite all of these challenges, the long-term importance of semiconductors cannot be overstated. Virtually every major technological trend depends on increasingly powerful and efficient chips. Artificial intelligence, autonomous vehicles, robotics, cloud computing, cybersecurity, advanced healthcare systems, smart cities, and next-generation telecommunications all rely on semiconductor innovation. In many respects, semiconductors are becoming what oil was to the industrial economy, a critical resource that powers modern society. The difference is that semiconductors do not simply fuel economic activity, they enable technological progress itself. Looking ahead, volatility is likely to remain a defining characteristic of the semiconductor industry. Demand cycles, geopolitical tensions, supply chain risks, and rapid technological change will continue to create uncertainty. However, the underlying trend remains clear. The world is becoming increasingly digital, increasingly connected, and increasingly dependent on computing power. As that transformation continues, semiconductors will remain at the center of the global economy. So, while short-term volatility may create challenges for companies and investors alike, the long-term strategic importance of semiconductors appears stronger than ever. Thanks for watching, and if you enjoyed this analysis, be sure to like, subscribe, and join me for future discussions on technology, markets, and the industries shaping our future.